Alright, guys. Well, let's get started. If someone joins in later, that's fine. And we'll record this as well. And you guys will be able to see it on YouTube or wherever. Alright, so what we're talking about today is crafting your winning strategy. So what does that mean, right? Well, first of all, why do we need strategies? Well, as we've talked about before a couple times, the market or the people that are in the market are trying to trick other people in order to give them their money, right? That's essentially what it is. That's just the cold truth, is that you are competing head to head with other people, and the people that win, well, it's not just like a small competition. No, there's a lot of money to be won, and the people that are competing are very, very, very good at what they're doing. So essentially what you're doing is you're competing with, one of the smartest people in the world. Essentially what you're doing, right? So then the question is, okay, well, how can I even compare? How can I even compete with someone or an institution that has, 30 Einsteins there and quantum computers? Like, what are we going to do, right? And, it's just the rule of nature really is that obviously we're not going to compete directly with them, but we will analyze what they do, or analyze the patterns that they put into the market, and based off of that we can find situations that we can profit from. And as we do, our profits, whether that's $1,000 or 10,000 or $5 million, it's still breadcrumbs, right? So unless you're trading with 50 to 100 million dollars, you'll be pretty fine trading with these amounts. And that's considering crypto. Like when we talk about Forex, that's completely different liquidity. Essentially it's unlimited liquidity, right? So you don't really have any slippage there. If you go to XRP, and something that we do, and something that we saw many times already, if we would trade XRP ourselves, me and Alex, we would and we would just market buy or market sell, we would literally move the price by a good amount, just us, right? And even before, previously in other Discord groups, when we gave signals and they came back and they entered the trade, it was a pretty big move, right? Which so much so that other people are counter trading with it, right? So that's XRP because it has less liquidity, right? There's less people trading this, and that's why it's moving that much too. And just little side note, like XRP is one of the first coins, right? It has been around for a while. It was in the top coins for a very long time, but it's one of those coins that did not have like a full explosion, full break up, because they had their SEC case and so on and so forth. So it kind of skipped the bull runs, which could give you an indication that it could go higher up. I'm not here to do calls right now, but like with Alex, we were talking about like $16, $17 XRP eventually, right? But there's still a lot that has to happen for that to be the case. That was a little side note. But when we go to Forex or we go to crypto, let me actually go back to here, because you guys, Karina and Casper, you were looking at this trade, which was, by the way, it was a pretty good trade. Right. Oh no, that's the wrong one. Sorry. There we go. So yeah, and like this move is like, it's still there, right? But and this comes down to the strategy. Like, yeah, you might have this move, and it might happen well because you did look at the smaller time frames correctly. But looking at the higher time frames, taking this trade 1,000 times, then in a very large chunk of those trades, you would the price or the higher time frames would just force you down, right? So that, like, it's a numbers game, really, right? And there's so many trades there are. So that's my philosophy is, I will go for perfect setups, rather than perfect entries or perfect, or a set amount of trades in a day. Because if I know that the trade, like, everything is aligning for my trade, I'm fine, right? Like, I just know what's gonna happen, right? And it's like, when you look at this for long enough, you'll have a pretty similar intuition, with the fact that, okay, well, everything is topped out here beautifully, so okay, well, there's only one place that we're gonna go. And when you look at this is, again, we're talking about specific strategy now. These are just side notes, but when you look at this, and you see, you basically remember or you analyze the curves or the stochastics on all different time frames, you will kind of get a feeling of how the price moves and what the stochastics do. And essentially, if every single time frame would be topped up, there is only one direction that price can go. But usually that's not the case, right? Usually you have, some topped and some bottomed out, and then depending on that, what the smaller time frames do, if the smaller time frames are aligned, then that's where you're gonna go short term. If the larger time frames are aligned, then that's where you're gonna go long term or longer term, right? And if they're against each other, it means that you will first go on the small time frame, and then you will go on the long time frame when the small time frames reload, essentially, right? So if we looked at the higher time frames, they're topped out and turning down too. The 1, 2, 3 are turning down, so we could assume that the 4 hour is going to turn down too, very soon. So that's aligned, right? But then on the 15-minute, we're like on the lower time frames, we're bottomed out. So what we're looking for really is for the 15-minute to come back up and then go down. Now this back up could be top of the range, but it might not, because there's so much down pressure from the higher time frames. So what we're really looking for is for this to come back up, and then once this is locked and loaded, and the smaller time frames, they just cycle in. So those will be aligned too. Then the move down is going to be much stronger because everything is doing the pressure down, essentially, right? I hope that makes sense. But this was just a little side note about what we just saw, and about the specific trade that you guys pointed out, which was, by the way, a very, very good trade. Because if I didn't have these time frames, I'd be like, this is beautiful trade, because you found really, really good alignment. Like, I could have you guys just spot trades out for me, and then I just take them. Thank you. So yeah, so why do we need strategies, right? Well, it's essentially this. What we're trying to do is we're trying to take the dynamic market and abstract it, right? Basically take information out to a point where we can say, okay, this is statically consistently true. And it's not easy, and you can't do huge periods of time, but you can do small periods of time. You can do the fact, you can do the fact that you're at the bottom of the range and your smaller time frames are bottomed out, so there will be a spike, right? It could go down right away, but there's some movement here, right? And if you're able to make money on this movement, that would probably have to be a bot that can do it, because it's it's very scalpy. But see how much this is, right? So if you were able, like 19 points, so if you were able to, scalp this, which on Forex you can, because you don't have slippage, right? You don't have market impact. There's enough liquidity. You can just set up a bot to only trade when there's a range, it touches the range, and your stochastics, your small time frame stochastics, are all bottomed out. The chance that you will get some kind of move up, right, even if it's a small move, is very, very high, So, we just isolated a situation in the market where we can say, okay, here we have a competitive edge because we're betting on this one thing, right? And when we, assuming this is our strategy, what we just said, we just made it up, right? But I'm sure it would work. So if we just assume that this is our strategy, we don't trade, this move up, right? We don't trade this, we don't trade any of that. All we trade is this, right? In this situation, that's what we do, right? Now you can have, very different strategies where you do trade this big trade, and we will talk about that, because a lot, and Alex mentioned that a couple days ago, is like a lot of what strategy you want to trade with coincides with what personality you have, what you like to trade, what you like to do, right? Because most people really, they want that big trade, right? So you should have strategies that are focused on that. Whereas, if you look at statistics and probability, this is where you probably see the highest probability. So you can do this all day, 1,000 times on 1,000 different markets, which is my preferred way of doing it, because, if I have my stats, right, and I know that there's a high probability here, and I'm able to do it 1,000 times a day, then, my variance in the day is very, very low. Because, as an example, I used this example before already, is let's say you flip a coin, right? And let's say you flip it twice. The chance that you get 2 times the same side is pretty high, right? Even though we all know that it's a 50% coin flip, right? But, if you flip it 2 times, the chance that you get it, twice in a row is pretty high, right? But if you would flip the coin 1,000,000 times in a row, then you would, it would be pretty damn close to 50-50 what you get, right? So essentially, when I know my numbers and I know that this is a high probability situation that's going to happen, if I do this 1,000 times a day, then I will make money, right? I will make money. Oh shit, I'm so sorry. Yeah, you're supposed to see my screen. I'm recording it. I'm recording my screen, just you guys in the Discord don't see it. Thanks, man. All right. So you kind of missed everything that I was saying. Amazing. Okay, so I was at the I was talking about the British pound US dollar, and this was the trade that Corinne and Casper set up. And what I was talking about is that we could do a trade where we have the bottom of the range, and all our smaller time frames are bottomed out. So all we do now is we expect some kind of move up, right? And basically all we trade is this some kind of move up, right? The small move up, and this might result in a large move up, but that's a different strategy. And no one's saying that you can't trade that strategy too. You can trade 20 strategies at the same time if you're capable of doing that. That's what we do in the hedge fund, right? We have 4 bundles. The first bundle has 3 strategies. The second has like 4 or 5. The third has 4 or 5, and the fourth one has 9 strategies simultaneously trading. Oh, all right. I see you. Okay. Sorry about that. All right. Third time's the charm. Do you guys see? I'm waiting for a clear confirmation. Okay, so again, bottom of the range, right? All our indicators are bottomed out, so we're trading this small move, and it's possible that the trade can go all the way up, right? But that's not what we trade in this situation, because our strategy is literally just taking these small moves and doing them, 1,000 times a day, right? Because that's the strategy. We can also, say that we only look at the 1, 2, 3, 4 and up, and we don't care what happens on the small time frames. So what we're working with is, okay, well, we've been moving down here, we've been topped up, topped here, or like topping here, right? So in this case, I'd be like, okay, well, I'm just gonna trade the 4 hour here. I'm gonna make a short, with a stop loss above this range, and take profit to this range, to bottom of this range maybe, and I would put some DCA orders here. So as we would move, as the price would move against me, I would get my average entry higher and higher. And this this now is a 1% move instead of a 0.1% move that we had before, so it's 10 times the size of the move, and this is a bigger move, or we can go even higher and say trade, I don't know, trade the 6 hour only, stochastic and RSI, and like long this, which is a 2% move now, right? So they're completed. Or you do XRP and you trade Alex's move, which, as you can see, happened, but the time that it happens is 30 days, right? And not a couple hours, right? So it literally just depends on what you like to trade, and what your personality is, and what you feel most comfortable with. And what you feel most comfortable with, that is the strategy that you should trade. And the way I like to do it is, I like to isolate a situation, know the probability of that happening, and as it happens, I like to add different situations in that, and have a bundle of situations that help each other out, that trade together. And that's literally what the bundles are in the hedge fund, right? So like our fourth bundle, for example, has 9 strategies, and they're all negatively correlated, meaning that when one strategy, we covered this before too, but simple example, we have one strategy that's trend following strategy, and one strategy that's a trend reversal strategy, right? So there's one strategy that is trading ranges. So every time we get to the top of the range, we short. Every time we get to the bottom of the range, we long. And that's the strategy, right? In simplified terms. Then we have another strategy. So let's say, right, so this top and bottom of the range plus stochastic alignment, right? Simple strategy, but also pretty solid strategy. Now we have a different strategy, which is, we have this range, but what we're trading now is that we're trading tops and bottoms of the range, but the stochastics need to align to be going up, right? Not to top out, but to be either bottomed or be going up. And that would be our trend following strategy, meaning that we're trying to catch these big moves in between the ranges, right? So let's assume we have these two strategies, right? So our trend following strategy, trend reversal strategy, is bouncing up and down in that range, and it gets invalidated if we break up. Our trend following strategy is we make money when we break up, and it's invalidated when we bounce in the range. Do you see? So the profit and invalidation are literally opposite of each other. But both strategies, back tested thoroughly, are profitable, right? Like to a very high degree of certainty, we know that they're profitable by themselves, right? But now we're putting them together, and they are literally the opposite of each other. So when we do that, what happens now is, when one strategy has a bad day, the other one has a very good day. And because of that, they basically even each other out. And whereas you would have, imagine this being your equity curve, your profit, right? So, your strategy is doing good, then it's doing bad, then it's doing good, bad, good, really bad, good, bad. Like this is basically the equity curve, if you have a good strategy, right? But now let's say you have two strategies that even each other out, or let's say like we do have 9 strategies. So what will happen is that your equity curve now looks like this, right? So that's a pretty big difference. And because of that, you can use multiple strategies, and you can literally design them in order to, have the highest degree of predictability. Now, I'm not saying, take 20 strategies and, break your brain over trading them. It's not what I'm saying. What I'm giving you is an example and the different strategies that we can have, right? So why do we need a strategy? We need a strategy because if we don't have one and we only, go off of what we think right now, then we're setting ourselves up to be the people that feed the market makers, right? Because that's literally what they do, right? So if you don't have a plan, if you don't have your own interpretation in that strategy that you are trading, right, then you are prone to losing money because you don't have a clear rule set. So whenever something happens when you're in the trade, you don't have a set of rules of what you're gonna do. So basically, you can just choose what you're gonna do in the moment. And when you do that, you will most likely not do the right thing. Because how do you do the right thing? Well, you analyze a strategy, you look back, for a long time, you see the strengths and weaknesses, you see the most common pitfalls and most common, times when it makes profit. And based on that, because of the learning, the data is here. You just need to look at it. It's literally here. So when you do look at it, you'll see, okay, it doesn't work well here, it works well here. So when this bad scenario happens, I need to do these things so I don't blow my account. And you have that plan, you've written it out, you plan it out, and now when you're, in a live trade, you know what to do. This is the way to not blow your account. If you don't have a plan, you will do something stupid. You will. I guarantee you that. Like, who's like, and like, just the thought, like, if we just thought about it in a different scenario, right? So let's say, doctors, right? Like someone in the emergency room gets rolled in, right? And they have, I don't know, a shot wound, or they're missing a leg or an arm, or all of the above, whatever. And the doctor would be like, yeah, I kind of feel like this right now, rather than, like, it's not like he spent like a decade in school to know exactly what to do, to learn the basics of human anatomy and biology and know exactly what to do in that situation. Like, he's prepared, right? And that's why the person survives, hopefully. Like, imagine you would just jump in there and be like, yeah, like, I don't really need to plan it, I just kind of wing it, Like, that's literally what you're doing. And the patient is your bank account. That's literally what you're doing. So that's why it's important to have a strategy. That's why it's important to have a plan and to look at it, plan it out beforehand, create a set of rules. And they don't have to be perfect rules, right? The strategy will be improving forever. It will never be perfect. But that's not the point. The point is to have a clear plan that works, right? It doesn't have to work incredibly well, it just needs to work, right? So that is why we need a strategy. Now, what strategy do we pick, right? And that very much needs to align with what person are we? What do we like to trade? What do we like to see, right? Because, you can go for higher wins, but you do that for higher costs. And you can go for smaller wins, and you can do that more often with smaller costs. And either one of them works, right? As long as you plan it out, they work. But you need to figure out what works best for you. So number one is, what's your goal, right? What's your personality? What's your goal? I don't know if some of you guys are shorting XRP right now. If you are, good job. So, right, what is your goal with trading, right? And that, there's one overall goal that basically everyone has, which is to make money. Yeah, sure. But I can tell you my goal, right? So my goal, and this is important because it influences every decision that I make. So my goal with trading is to, find a set amount of strategies and have a high degree of probability of success, very high degree of probability, basically saying that, okay, this, will just happen, and being able to increase that degree of probability by doing it a lot of times, and increase that degree of probability even more by doing those many of those strategies all together. And the result is that I have a bundle of strategies that can automatically trade because it's very simple. And every single day, or every single week at least, you see a profitable return because my work, my stats, and the probability of success in those stats have been executed 1,000 times. And because of that, so what I'm looking for is, these moves that are very, very, very likely to happen, right? That's one thing that I'm looking at for trading, and that is because of my personality, which is I'm very, logic driven and systemized. So I would like, especially when it comes to money, I would like to have predictability, right? So I don't want to, it's not a sport to me where I wake up and I hype myself up for a good trade, and then I am, in there all hyped up and, trying to, get this move and go out and just be all excited. That's not what I want, right? But that's just me, right? You might want to catch this trade. I mean, you probably do, right? So if you do want to catch this trade, well, then you're trying to, look at trend following strategies rather than trend reversal strategies, right? So that's an example with your personality, right? Do you want to, what's easier for you, right? Is it easier for you to, have a couple big trades that cover your losses and give you profit? Or is it easier for you to have small trades that, win most of the time, right? And that's a decision to make. And, you can do both, right? But it's important to at least understand how you're driven emotionally, because if the strategy would not align with you, you would find ways to break it. And when you find ways to break it, the thing that really costs you, or the thing that loses out on most, is your bank account, right? So what's your goal? What's your personality? And based on that, you can choose a strategy, right? So what different strategies do we have? Well, we covered a couple, right? I really like the stock alignment trend reversal one. It's probably one of my favorite strategies. Also because I've done it so much. And a variation of this strategy actually is the most consistent strategy we have in the hedge fund. And that is proven over thousands of data sets. It's the most consistent one, specifically on Bitcoin, by the way. But it's very, very consistent. And essentially what you're doing is, you're training the ranges. So you're right, by definition, you're right, more times than when you're wrong, because you break out only once, but you range multiple times. So, you're already set up for, something good. So that's one, right? Then we have our trend following strategy. So how can we do that? Well, it's a situation like this. So let's say, let me just mark this because I'm gonna move around with the time frames. So a trend following strategy, right? So we're in a range, right? We're bounce here, but now we're looking to move further. And usually, on the 15-minute, it's topped out, right? So we'd be shorting here. But let's just see, and I haven't looked at this before, by the way, but let's just see what the higher time frames do, right? Okay, so our 30-minute is not topped out yet, right? Whereas our 15-minute is topped out. This one still has room to go. So the 30-minute has room to go higher. Our 90-minute just turned up, right? So this one just started going up, right? Our 1 hour just started going up. And this is exactly what I'm talking about, Casper and Karina, with the British pound trade. So our higher time frames, they're all in the process of going up. When the 4 hour, this is the 3 hour, sorry. When the 3 hour is in the middle, going up in a clean move, I would not short here ever, Same here. The 4 hour is a very, very strong time frame and still going up. So would I short here? Probably less likely to do so. If it was my strategy though, right? I would not ignore the strategy, but I would be very careful, and I would be, the invalidation of the strategy is that we break above the range, which we did, which would be a clear invalidation, and we would have a stop loss in a strategy that has a risk to reward of, I don't know, let's see, of around 3-1. So like boohoo, you'll be fine. So I would still trade this, right? Unless I have a higher time frame that where I look at. But if you do this manually, you do. So especially these middle range time frames, which are the most important ones, right? They were all still going up. So probably less likely to turn around here. And also here we had to have, when we bounced here on the smaller time frames, we had to have some kind of some kind of turn, right? So the 5-minute did not finish the move. It did not finish the move. It was going down, but instead of going down, it turned around in the middle and went further up, which and our 3-minute already bottomed out already, right? So that was a very quick move for the 3-minute. So all those together plus the higher time frames, they're still not finished, give you a lower degree of probability here. But if you're range trading, I'm sure that my strategy would have still, the strategy that trading automated would still take that short and be stopped out on that short. But that's fine, because that's the strategy, because that strategy overall is still profitable, right? So in this case, if that is if you're looking at higher time frames, you're at the top of the range, then, and your trade is the breakout of range, right? So essentially what you would trade is, I would wait for a confirmation. So essentially where the stop loss is of the trend reversal, that's your entry for your continuation strategy, or your trend following strategy, right? And when you do that, what's the good part about that? And this is funny, right? So the trend reversal strategy is our most consistent strategy, and our trend following strategy is our most profitable strategy, which is interesting. But what you have in these moves, what's good is that when you write big, like when you write and you trade this, then you're flying, and some might prefer this strategy, because when you do that, when you write, you're rewarded very, very well, very highly. But this break happens only one in a range, right? Whereas, a touch of a top and bottom of the range happens multiple times. You can trade both, but whatever you trade, you need to be aware of what you're trading and why you're trading it, which is why I'm explaining it now, because now instead of just, seeing a support or resistance, you'd be like, oh, okay, so, support means that it will bounce, so I will just trade the opposite. No, you have a strategy, right? On both sides, really. But you have a theory and you understand why that's happening, and because of that you trade, right? It's not, you're not reacting to the market, you are waiting, and when the thing that you are looking for happens, then you trade, right? So that's something that Warren Buffett said when investing. I'm sure some of you know it, is that the beauty about investing is that you don't need to be right all the time, right? Like, you can say no to a million opportunities. You just need to say yes to the right one, right? So you can afford, it doesn't cost you anything to say no, right? It only costs you to say yes. So when you say yes, just make damn sure that it's a very high probability that that's going to happen, right? And when you do that over a long period of time, over 100 trades, you will be fine. You'll be doing well. Rather than, trying to, make profit off of, anything. Like, and I know, like, I'm guilty of it too. When someone, enters a trade and, let's assume that I am trading a trend reversal strategy and I'm doing fine, right? I'm super consistent, I'm doing well, I'm making my 40-50% a month. Yeah, I'm completely fine, right? I'm doing great. But in this situation, I shorted here and I got stopped out, which is according to plan, by the way. This will happen. This is the invalidation of our strategy, and it has happened before and it will happen again, and it doesn't matter, because overall I'm still profitable. Every week I'm taking home profits, right? Like, I'm doing great. But right now, because I'm a human being, I'm a little frustrated because I got stopped out. And while that's happening, someone else, my friend, just texted me, and he's like, dude, I already made 30% on 10x, right? Or, let's say he's a degen and he's doing 30x. So, dude, I already doubled my account right now and it's going to go higher. And it will go higher, and he like triple or quadrupled his account right here, while I just had a loss, and that's all I did, right? So that can be frustrating, right? Of course it is. But that does not matter. That doesn't mean that I'm gonna throw away my strategy now and start, copying his strategy that I don't even know if it works. He just had a good trade, right? Because, flip it, right? Flip the script. Let's say that I am, trading a range, and, as always, because it's a consistent strategy, it's going well, right? So I just trade my range, and I just make profit over and over. And now my friend comes again, and he's like, dude, I'm just losing money, because all he's trading is breakouts that just didn't happen here. So he's been losing money all the time. And, what I would tell him would be, it's fine. You have a plan. You know that there's times like these, and just stick to your strategy, and I will stick to mine, right? I will not tell him to drop his strategy and come over to my strategy and start, reinventing the wheel again, right? So essentially what you're doing is you're hopping from opportunity to opportunity or from strategy to strategy without really mastering one. All of them work, but by just flipping around, the only thing that you're assuring is that you will lose money. Because the market helps with it, right? So whenever something looks super volatile, like it's never gonna stop pumping, guess what's gonna happen? It will stop pumping, right? That's exactly what happens. That's the basic cycle of a market: high euphoria, high fear, right? So that just adds gasoline to the fire, which is that the market's literally designed to do that. Right? But so how do you make sure that you are profitable? Well, you find your strategy, you align with your strategy. With align it's like a relationship, right? Or a business, right? Let's just take a relationship example. So you meet someone, right? And the first time you meet them, they're nice. You get to know them a little bit better, and you fall in love, and you're like, this person is absolutely perfect, right? Like every single thing, it's just an amazing person, right? Like everything is perfect, exactly how I want it, right? And then time goes on, weeks, months, years go on, and you find things that are not perfect, right? Which is absolutely normal. Everyone is imperfect, right? Everyone has strengths and weaknesses. You just did not see them at the beginning because you were focused on the amazing strength things, and you were in love, right? I mean, you're still in love, but you were just clouded before, and it just takes time to see them, right? And one of the worst things that you can do is that at that time, when you start seeing the imperfections, they were there all along, right? It's the same person. It's the same person you fell in love with, right? The worst thing that you can do is jump ship to another opportunity, that being a strategy or a person, because that a strategy or person looks perfect now. The reason they look perfect is because you don't know enough about them, right? I've been watching a presentation a couple days ago. That's probably why I'm mentioning it too. And basically what it is at the beginning, what does it call it? I think uneducated optimism, right? Uneducated optimism. That's when you see a strategy, or when someone that you don't know, let's just say someone joins our Discord right now and they post, oh, I just made like 1,000,000% on this trade, right? And you'd be like, holy shit, your strategy has to be amazing, right? And then he posts a second trade and it's even better. You're like, oh my God, I need to drop everything that I'm doing right now and do that strategy, right? It's called uninformed optimism, right? Uninformed optimism means that the only reason why you think that this is so perfect is because you don't know enough about it. And the problem is that once people find out enough about it, they're like, oh shit, I did not know this. This kind of sucks. I don't know how to solve this, right? And how do you solve it? Well, you solve it, right? The situation's shit right now. It's shit right now. But you figure out a way how to do it and you solve it, right? But that's the, point where there's the highest pain. That's the highest pain point, right? So what do most people do is, right, so here, everything's great, right? Uninformed optimism. Then they figure out that stuff isn't actually as nice as it seemed. And now they're like, oh shit. What they should do is go through this shit and get back up. But what they, to informed optimism, right? So now they know what the problem is and they solve it, and now it's actually nice. But what they do is, oh, there's another vehicle, another opportunity here that looks amazing. And they just jump ship. And then they figure out, oh shit, this actually sucks too. So I need to go somewhere else, and they jump ship. And they do that constantly. And they do that in business, they do that in relationships, they do that in trading and strategies, everywhere, because it's a human behavior. It's basic psychology, right? You're looking for the fastest or easiest way. But we as traders, we need the conscientiousness of knowing, okay, this is perceived as easy right now because I don't know enough about it. Once I do know more about it, it's gonna suck. But what I have to do is I have to go through the hard part in order to get to the good part, and not jump ship, go to the next shiny object and do the same thing again, and then again, and then again, and then again, till you die, right? This is the same thing with strategies. And this is why it's important to understand your strategy. And that's why I think that actually the relationship example was good, because that's really what it is. You kind of need to build a relationship with that strategy, because you need to be okay with the strengths and weaknesses of that strategy and stick with it, rather than jumping to another strategy, right? And if there is a problem in the strategy, you solve that problem, but you're building that strategy. And yeah, you don't have to have one, you can have two or three, but you need to be fully focused, and you need to know exactly what's going on those strategies, right? Then later, when you have it automated, like your bandwidth extends massively. So that's a different story. But the point is that you need to align with your strategy and be okay when it sucks and when it doesn't suck, and expect it. Don't be frustrated. Yes, you're going to be frustrated a bit, but don't be overly frustrated, because you know that that's going to happen. But you also know that the wins are going to outperform the losses as long as you stick to it. If you don't stick to it, it won't. And this is the hard part in trading. This is why 99% of traders lose, because they don't understand that they need to stick to the strategy. They might hear, stick to the strategy, and the person that's telling them that don't even know why, right? This is why. It's because you need to eliminate, like, if you just stick to a theory in the market, you'll be fine. But the market gives you so much noise, so much chaos and volatility, and all it's trying to do is rip you away from your theory. And that's when you lose. And that's when the market wins. And the market wins constantly with most people. That's why it works, right? That's why if you stick to the strategy, you will make money. That's where the money is coming from, right? It's not coming from a money printer. It's coming from people. That's where it's coming from. It's from people that panicked, that did not stick to their strategy, right? And then why, again, is it important? Well, it doesn't matter what strategy you have. Even if your strategy is bad, but you stick to the strategy, it means that you can backtest it. You can see how it would perform in history, and you would see that it did not perform well, and you can change it, right? But and you can improve it. But the only reason you could improve in the first place was because there was something to improve. If you just trade based on thought and emotion, there is no data, there is no groundwork, there's no foundation, there's nothing to build on, right? So all you're gonna be is, you're gonna be, up and down. You're just gonna be like a lost fish in the sea, constantly losing money. And it won't feel like losing money, because you will have those, days and trades that are profitable, and in your head, those are gonna be much more euphoric than the losses, because you're numbing down the losses and amplifying the gains. So in your head, you still think that, you're a trader, you're doing fine, you're making money kind of somehow, you kind of look away from that P&L, or you just justify it. But no, the truth is that you don't trade, you gamble, right? Just stick to a strategy, build a strategy, stick to it. It's not easy to build a strategy. It's not, right? It takes a lot of time, a lot of effort, a lot of money, a lot of losses, right? But lucky for you, you're in a Discord where there were some dumbasses already that did all that work without them knowing that it really cost that much. But hey, they did it. So at least, there's something to work off of. Lucky for you, not lucky for me, because guess what? I'm the dumbass that did it. Alex too. I don't know if he's here, but shout out to Alex, dumbass number 2. So right. So these are trend reversal strategies, trend following strategies. And then, there's completely other approaches that are completely valid too. What Alex has as well is his fractal code, right? So essentially what he's saying, is that there's a price. Okay, so the theory behind it is that the market only moves, like any single movement you have in the market or pattern that you have in the market is one of, X amount of patterns. And it's not that many. It's maybe like 15 patterns. And every single price movement that you have is one of those patterns, which means, for example, a move up, like a explosion in price, which we had in XRP, with 2 middle tops and then 1 drawdown. Like that's a fractal, right? Or there's another fractal, explosion up with what is it? Actually, there's like 2 middle tops or something like that, and then a drawdown. So you could say that this is a similar fractal, right? So what Alex does is he has this code that analyzes the current situation and then compares it to similar price movements in the past and matches it together to a degree of probability. And then if he gets a match, a high probability match or multiple as confluence, right, then he can expect that that's where the price is going to go to. And I think that he posted that very picture today. If you guys go to Alex Signals and you look at that picture with the purple line, that's a fractal. That is a point, that's a time period that the software found him that is most likely where the price is the most likely to continue this way because of how it just moved up, right? And the purple lines are actual price movement of XRP that happened at some time in the past. Alex will be able to tell you the exact time, but I just don't know. So that's another strategy, right? That's a fractal strategy. And the beauty of it is that, the more strategies you have, the more you can build confluences, right? So let's say he has this fractal strategy with, these shorts down, but then, you'll also have your trend reversal strategies where you look at stochastics and most of them are topped out. So now 2 of your strategies that are pretty good, I can confirm that it's pretty good, both of them, right? Just take my word for it. Like, both of them are in confluence now. So now your probability that you will be successful is higher, right? And so that's, you have trend following, trend reversal, you have your fractals, which is something completely else. You can trade news, right? You can have confluences in news. You have basic strategies like moving averages, right? Is Cypher here? Let's see. I don't know if he's here. No, he's. Yeah, you are. Can you tell me the 2 MAs that you're using? Because that's another strategy, right? Moving averages. I will free you of your suffering and remove all my drawings. And yeah, so you can have moving averages. MA cross, I guess. So you have 2 moving averages, and that's another strategy. Cypher, can you tell me the moving averages that you have? I think you have a 220 or something like that. I'm not sure. I'm just gonna do this. So that I do not know if this is correct, but or that's what he's trading. But this is another strategy too. So you have 2 moving averages, right? And the theory behind there is actually very similar to the stochastics theory, which is that your price has an average and you're deviating up and down from that average, right? And what we have here, we have 2 lines. One is the orange line and one is the green line. Now, The orange line is taking the average, but from a much shorter time than from the green line, right? So I zoom into the orange line and you can see, it's kind of the average of the price, right? But then I zoom all the way out, and you can see that the green line is kind of the average of the price. It's just a different perspective, right? And the strategy now, the trade really is that when our orange line crosses the green line, and that would mean that we're in an uptrend. And as you can see, it works pretty solid most of the time, right? Now, I know for a fact that, this strategy, you can't trade only this, right? Like this solely. You would need other confluences too, but if you have them, then this can be a very solid strategy. Possibly I would look at, stochastics on the lower time frames, for example, or EMAs at the lower time frames too. Are the crosses at the same time? And this is, this comes down to like a strategy workshop where you can just do so many things, but what I would recommend for you to do is take the strategies that have been already, developed to some degree, like what I am talking about, what Alex is talking about. Like those strategies have thousands of hours of manpower behind them, right? Like 2 years of developing them. So all the questions that when you have a new strategy, all the questions that you might ask yourself have already been asked. They've already been backtested. They've already been analyzed. A billionaire from New York has been looking at them for years, and is finally he said, yes, this is good. Like those are the strategies, So it's a good way to start, right? And then as you go further, you can start developing the strategies yourself, or adjusting them. And this is a beauty of this Discord too, and this is something that I'm expecting to happen, and hopefully sooner rather than later, which is that you guys will take those strategies and you will find different variations that work, which will improve, our overall performance again. So this is another kind of strategy that we can trade, right? Which is a cross, an MA cross strategy. So there's many ways of trading it. And really, the main thing to look at is what works best, right? I like the trend reversals. It's just in my muscle memory where I can look at a market. I look at 3 time frames and I know where the price is gonna go, and I like that. I feel like that is an edge that I have based on experience and muscle memory in that strategy, and that's why I like to use that. That for me personally, right? And I also like the fact that they're predictable in a way where, as Sath was doing, I know that you didn't hit some, right? But you can just move your order down, or, put in layers, like you said. But you can, in a way predict, where your wick is going to be. And by the way, Sath, your prediction is going to improve by a very large amount if you start looking at all time frames and the stochastics of them, because depending on how they're aligned, that's the strength that you will have in that wick. So your higher time frames will probably tell you the trade, right? But your lower time frames will probably tell you how high the price will still go before turning around. Just a little tip. So there's many strategies that we can choose, and the point is to choose one, understand it, backtest it, and based on that, build and trade it, right? So when we pick a strategy, what do we do? First thing we do is we understand it, obviously, and then we get acclimated with it. Right? We understand it, we get comfortable with it. So we backtest it, meaning that let's just assume that this is the strategy that I'm trading. So I would just go back in time and I will realistically, meaning that, I'm not going to say that this is a short just because I know where it's going to go. Like I am, and you know what? This is gonna help much more. I don't know if the free plan has this, but you can do replay here on TradingView, and this way you cannot look at information that you still don't have. And with shift and arrow, I'm going through here, and I can see how the market would have been playing out, right? So I can see, okay, where do I short, where do I long, and I do like 20 trades like these for my strategy. Here the crosses were looking pretty fine, right? Let's just see. Like at this point, I just want to see it out of curiosity. So we're going up. Let's see when's the next cross. Okay, we just crossed here. Here, I think. Yeah, right here. So we are short. Is that gonna play out? Play it out okay if we had some good TP. I don't know if we had some good TP. And now we're long. And by the way, you can even simulate it here. So now we longed. Okay. Hey, this is working pretty well. I like this strategy. I don't know when I would TP though, which is a very important point. But let's just assume, I don't know. I'm not going to TP now. I'm just going to go cross to cross. Okay, so now we crossed it. So now I sell again. And essentially I'm backtesting the strategy, right? And I do this for like 20, 30 trades. And what will happen is that I will understand, I will get a feeling for that strategy, right? I'll understand when this strategy is working well and when is it not working well. And because of that, because I analyze these trades, meaning that, okay, so here I entered a long, right? I entered a long because the MA crossed, and that's literally the only thing that I'm doing, right? And, you know, just looking at it, I would probably take profits at, you know, TP levels or like at resistance levels or support levels. And the way I would take profit would be the same way I take profit now, which is middle of the range, top of the range, best case scenario. That's what I would do, right? So I would get the signal, I would enter, and then I would take profit, and that's trade. And I would analyze the trade saying that, okay, I entered here because of this. I put my TPs here because of this, and this is how the trade played out. And then I do it here. Here, you know, we had a cross, but then we crossed back up before we crossed longer down. So how do we solve the situation? Did we stay in because our stop loss was higher, or did we exit and then go back in? I don't know, right? What would make sense here? And you do that with a couple trades. So now, you know, if you're in a live trading scenario and something like this happens where we cross, then cross again and then cross again, we know what to do, right? So, right, so that's replay mode. I'm not sure if the free version has it, but even if it wouldn't, you can just replay it by hand by, you know, you don't see the data here, right? So you just go like this. So yeah, you replay the strategy and you get acclimated with it, right? You get a feel for it. You know when it triggers, when it doesn't trigger, when it works well, when it doesn't work well, right? You get it into your muscle memory by analyzing past trades. You find times when it works well, you find times when it doesn't work well, and you focus on the times where it does not work well in order to account for those situations. What needs to be done in order to stay profitable in that situation? And this is, you know, if this might sound like a hard thing to do, this is what the Discord's for, right? I'm here helping you out, and you know, I do know the answer to most of them, especially when you're going to trade a strategy that I give you. So yeah, but because you account for it, you will not be shocked when it happens. And because you will not be shocked when it happens, your outcome of the trade will be predictable. Losing or winning, but you will know why and how it happened, and you know that over a basket of trades, it will be profitable. You would not know that if you would not know exactly what to do, right? It's the preparation that makes the money. And so you look at the times that work well, you look at the times where it doesn't work well, and you come to an agreement between you and your strategy, right? And once you do it, you realize the strategy, you accept the strategy, and you become at peace with it, essentially, right? You understand the strengths, you understand the weaknesses, you know that overall it's good, and that's that. You also understand and you know that you will get FOMO from 1,000 different directions, because someone else the strategy worked, with someone else just made $1 million because they were gambling, whatever, right? Whatever, those situations will happen, but that strategy will stay consistent, and you will stick to that strategy. You don't have to stick to only one strategy. You can trade multiple strategies, and that way, you have a bunch of trades, which is actually the preferred method, because that lowers FOMO a lot when you have strategies, especially negatively correlated strategies that kind of trade the opposite way, because when one strategy is losing, the other one's winning, right? And you can trade both. That's probably the healthiest way of trading, because you always have something that's winning, right? Just mentally. But yeah, you need to accept the strengths and weaknesses of that strategy, and that is your trading performance from now on. And once you're okay with that, then you get to trade consistently. And when you do mistakes, like, the market has been around for a while, right? Crypto for years, Forex for decades. So you have enough data. On a 4-hour, on a 15-minute, you have enough data, right? So any mistake that you can ever make right now already happened in the past. So if you analyze it, you'll figure it out. The problem is that most people don't want to do the work. And they would, because, it's much easier to, like, going back and looking at trades and analyzing them and writing down every single trade what happened. That sucks. That is boring. That's very boring. What's not boring is seeing the price spike up, going 100x long, and seeing if you become a millionaire. That's not boring. It's exciting. But guess which one will make the money? Right? You'll make his money. The person, Joe, right? The person that loses all the money here. So preparation beats luck, beats anything else, right? And it's like looking back and analyzing the trades, like, that's literally the minimum that you can do. Like, that's the minimum that you can do with the strategy. Like, just to lay it out for you, going back and looking at every single trade and analyzing it for 1,000 trades is the start of our analysis. That's when we're like, okay, we can start analyzing now. That's the start, right? So for most people, it's something inconceivable to ever do because it's so much work. And that's not just for us, for like literally anyone that's somehow serious about trading. Like, that's just the start of the work. That's just a good foundation of data that you can build out from and find different variations to test. So yeah. So that's basically that those are the strategies, and that's why it's important to have the strategy. So your homework now, right? Your task is to pick a strategy, right? Analyze the strategy, at least 5 trades, right? I've been talking about 1,000 trades, at least 5 trades. So look back in the history, whatever strategy you pick, you write the rules down, and then you analyze 5 trades, and you write down 5 trades of that strategy, what happened, what didn't happen, what could have been done better, why it happened, and you post it into the accountability channel. That's your next task. That's the next thing to do. And I promise you that after you do that, you will have a much better understanding of what you're trading. Like if you're trying to spot trades, if you're trying to have good entries, you look at only 5 trades in the past, fully objectively, and you'll be able to do that better. That's literally it. Like a little background. We've been struggling a lot with making our strategies profitable at the beginning, as you know, anyone. And we tried many things. It's not like we haven't been working, right? We tried many things. We worked a lot. And with many things, I mean hundreds of things. Like we literally built full stack softwares, multiple, and for them to, with just the hope of them working, and they didn't. Many times over. But when it turned for us, when it really started working, and when we got to the point where, you know, like we're trading right now one of the most consistent strategy I've ever seen in my life. And the reason it got to that in the first place was because even though we were doing so much work, we did not do the dirty work, right? Which is just to sit your ass down and manually go over every single fucking trade that you see. Which it sucks. It sucks, right? But we did it, and because of that, we understood what the strategy was in the first place, why it even worked, why it didn't work. And it was very, very simple to switch it to a point where it's consistently profitable afterwards. Because we did something that no one else does, and do the most painful, most annoying thing that you can do, which is just sit on your ass and look at past trades. There's zero excitement there, zero. But that's where the money is buried, right? In trading, money is buried in boredom. And loss is hidden in excitement, right? If something's exciting, you should be very worried, right? So that's what I want to cover today. I think I covered everything. You have your next task. I think this is going to be really good, and I'm genuinely excited to see the analyses, because I do have an expectation that I will probably learn something when you guys do it. So yeah, that's great. Thank you everyone for joining. If you have any questions, now's the time. Otherwise, I'll answer them later in the general chat. All right, guys. All good. Thank you very much for joining in, and I hope you learned something today, and I can't wait to see the analyses and suggestions. All right, guys. Thank you, and bye-bye.